Welcome back to Golden Rule Radio. We're broadcasting from the country where no one is above the law, on the other side of the ocean where Brexit hasn't happened yet. And I don't know whatever happened to it'll leave, but politics aside, we're going to talk about gold. It's starting to move up, and this is the time of the year for you to be buying. You need to be buying with confidence because the last number of years, 5-6 years, this trend has been very clear. It's bottomed here toward the end of the year in December. And then come January, you want to be in. We've said that. This is like going back a whole year and saying the same thing. Here we are again. This is where you should be buying with confidence.
I get your little joke, and I agree with your exhortation to be buying here, but I'm going to disagree in one note, and that is that I think the Federal Reserve is above the law. they are
people.
Continuing to, and certain people within
Absolutely, that's evident.
Well, we've seen a record now in 2019 of central bank gold buying. So they know something. They can try to print our way out of this. But the rate, not only that, but when convenient, certainly the government can spend and not be held to the confines of the law either. But all joking aside, thank you for the encouragement on the gold price. Miles, why don't you jump into the technicals?
Yeah, and speaking of the Federal Reserve, we had the minutes released today, saw a little bit of a gold pop up. Gold's still in that rising trend, but again, the longer this goes on, the more likely we are to resume what is most likely the trend right now, which is that long-term bullish market. So all of us were hoping for more pullback. We got a lot of clients who are looking at adding positions at lower prices, but you do have to factor in the timing, like Robert talked about. Eventually you run out of runway, you got to pull back on the stick. So
it sure feels a lot to me like a potential energy, doesn't it? For lack of a better term, it's like this spring is being pressed down on. I'm just waiting for this reversal.
Right. And every little thing is starting to translate out into the markets. The Dow coming off of a pretty steep drop during both Black Friday and Cyber Monday, Dow off, transports off, NASDAQ off. And now today with gold coming up and the dollar dropping at least 0.5% today on the dollar index, the evidence is in the market pricing. So we'll see how the Christmas season plays out, I guess, if we can have any additional. Like me, most Americans put off their Christmas shopping till about the 23rd. I think there's been some pretty bad movies in the past about that, like the Arnold Schwarzenegger one. But that tends to be me, so maybe we'll get a little last-minute kick. But the unemployment number has dropped again. And again, every single year we have the same conversation. Guess what? Guess what happens in January after the Christmas buying season?
It gets revised.
Well, and the unemployment numbers go down because all the part-time labor and people on
temporary
temporary jobs get dropped off. So and now those people are back out in the seeking workforce, not the currently employed workforce.
Before we jump to silver, let's talk about gold a little bit more. Gold did come down and test previous support and held, and now it's coming up off of those support levels, currently in the 1470s. And I think the next short-term previous high that it needs to go through is somewhere around 1485, and then it looks like it wants to go higher. It's been strong. I don't think we're completely out of the woods of a potential lower number.
I don't either.
Before the end of the year. If that happens, back up the truck. But I think you're in a good range right now. This is the time to be confidently buying.
Well, we're getting to the point now, with gold pushing up into the 1500s, and obviously it'll spread out more as it gets higher. But we're getting to that point where when we have these swings, $20 doesn't mean anything anymore. You're looking at ranges here, 1450 to 1550, and anywhere in that range, and we're still in sideways trading. So it's going to scare some people, and that's just the reality of it. Now, in the long run, $3,000, $4,000, $5,000 gold, you're not going to remember $50. But it is important to remember that just because we may see a $30, $40, $50 climb, that doesn't mean it can't reverse back down and retest levels, or vice versa. If we get that pushed down to some of those lower prices we're hoping for, that's back up the truck point.
Yeah, well, think about the volatility in the equities markets. If you see a 2% move in one day, that's catastrophic if it's to the downside, right? Well, if we see that in silver or platinum or palladium or anything else. It's like just another day at the office.
Well, you only see one thing in palladium, but we'll look at that in a minute.
We'll skip. Let's do silver, and then let's talk about platinum, because it's exciting.
Silver, I think, is still coming down. I think gold may have put in a low. Again, there are some other potential lows, but gold may have put in that low at that very shallow point. But silver...
Probably know in the next couple of weeks.
Right. And silver has already come deeper and really just has kind of one more spot to touch down here. Maybe one more little push down and follow the path of, say, what platinum has already done down at that 618 fib. So like to see silver come down just a hair more, but again, running out of room for the year.
Yeah, speaking of platinum, it has popped up really nicely into the mid-900s. And a couple of weeks ago, when we were before Thanksgiving, I think we said platinum was looking good and showing strength. So we're seeing that strength follow through here with platinum jumping back up above 900. If you back up to this time last year, platinum was bottoming 780, 800, and it's going higher. Looks like it looks like it wants to. It's been following a good trend line. So we like platinum, not just the price of platinum, but the relative value of platinum below gold, 35% or so below gold. That's a value.
Yeah, Miles, you called that last week, honestly. Just sort of reiterating that bounce off that fib number. And yeah, 947 today. We're up 2%. So we'll take that all the time. It's doubling the performance of palladium, which has been stealing all the attention.
I think this is a good time to point out how those ratios work. I mean, I think we've all gotten calls from clients asking, why is palladium still going up when we're recommending the platinum side? And it's because of things like we're seeing here. Just because we think platinum's going to play catch up, we're talking about a percentage catch up. That doesn't mean palladium falls through the floor. That means that you can see both metals going the same direction at the same time, like we expect to see with gold and silver. We expect to see gold and silver both move up. We just think eventually silver outperforms gold. So I think we're starting to see some inklings of that. And going forward, still looking at a very strong silver position as a recommendation. Fill in with some platinum, fill in with some gold, especially rare coin gold, and work with an advisor that can help you get a portfolio that's tailored for you.
Yeah, look, that correction is going to happen when silver outperforms gold, right? And I'm going to go out on a limb. I'm going to say we're going to see $23 silver in 2020. So do you want to ride from 17 to 23? Or not? That's key, but that's only going to get you part of the way towards the ratio correction. It's going to get far more exciting when we get down into, the 60s and 50s on that ratio, and we can start really talking about the details of the strategy.
And of course, if you'd like to see a palladium chart, just draw a line sideways on a piece of paper and then turn it to about a 45-degree angle.
Yeah, transitioning off the metals into sort of the fundamentals and the news, what's causing this little 2-day volatility. Again, as Miles alluded to, the Federal Reserve announcement, no decrease in interest rates. In fact, they don't even believe that that's going to happen in 2020 at this point. So all the employment numbers, the wage growth, inflation numbers are all showing that they can kind of hold still. But what really matters is what's going on behind the scenes anyway, because they're frantically trying to stabilize, in my opinion, the derivatives markets. That's where the billions and billions of dollars are being pumped into non-bank entities even, and so we're going to continue to watch that. And, it's sort of like European central bank stuff, isn't it, Robert?
Yeah, it's like Powell pulling a Draghi and saying they'll do anything.
They will do anything. And here's the amazing thing. I'm going to point everybody to this article by Daniel R. Ammerman, and you'll have a link here, but this is pretty important because he points out that just in the last 12 weeks alone, $422 billion in federal government deficit spending. All right, 12 weeks, you guys. So the government is admitting now that we're on course to not only exceed $1 trillion a year in terms of our intake versus outflow, we're going to exceed $1 trillion a year, it appears, in perpetuity. Okay, so get ready. And what's happening is the Federal Reserve is funding about 90% of that. So you talk about printing money out of thin air. It doesn't guarantee that the dollar collapses. Okay, I'm not calling that. But what it does guarantee, in my opinion, is that gold continues to climb over the years because you are pumping so many dollars into the world monetary system.
Yeah, I've got a quote for you from von Mises. It says, "There's no means of avoiding the financial collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as the result of a voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the current system involved. That's where we are.
It's totally where we are.
The timing of it, everybody asks, when is this thing going to actually come to fruition? When does it implode? And it's just whether they decide to abandon the credit expansion cycle or it just completely collapses and has a catastrophe on itself.
Yeah, I would even say be careful with anybody that predicts an exact date. You can pretty much guarantee they're going to be wrong, right? But you prepare prudently regardless. Well, do expect a little pop in the equities markets again before the end of the year, I think, if they stave off these Chinese tariffs that we mentioned last week. Eyes on that. But certainly that would be countered if the impeachment articles get some steam or momentum and it looks like there's going to be a trial in the Senate. Most likely you'll see equities drop, you'll see gold climb, you'll see the dollar drop. That would be a normal market reaction to that. It just depends on how serious it appears at the time.
Well, and the one benefit of the impeachment trial, of course, is it's keeping the government from doing any actual work, which always ends in catastrophe.
Yet on the cover of the Wall Street Journal, surprisingly, at least in terms, verbally, the House Dems have agreed with Trump on this North American trade deal. So look for that to get inked in 2020. But man, talk about no market effect. No market effect to that piece of news.
Right.
That does it this week for Golden Rule Radio. Thanks for listening. You can follow us on Twitter at ICA Gold, like us on Facebook, visit our website, McElvanney.com, or give us a call at 800-525-9556.
Thanks for listening. Have a great week.